Markets in free fall as investors are starting to panic. The S&P 500 down 2.5%. The PSEI down 1.9% last week. And as the markets open into the ghost month this Monday, should we start worrying? Let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. So major indices from all over the world are mostly down last week. The news highlight was the Fed decision on keeping rates steady until they see more evidence of inflation easing in the next few months. However, this fixation on inflation may have caused the Fed to overlook other indicators, as we are seeing worrying numbers on a couple of other areas in the economy. First, we have initial jobless claims rising to 12-month highs, coming in at 249,000 compared to the 236,000 expectations. Here we see jobless claims have been steadily going up since last year. Second, the PMI numbers dropped further into contraction territory, coming in at 46.8. Now remember that anything below 50 indicates a contraction in the manufacturing sector, and this surprise decline is particularly alarming considering the rate of this decline, and note that the manufacturing sector accounts for 10% of the American economy. Now, this puts more pressure on the Fed to cut rates more aggressively this September, as we see the odds of a 50 basis point rate cut rising to 27.5% after the news came out. At this point, for September, the market is already pricing in a sure rate cut. But the question right now is whether it's going to be a 25 basis point rate cut or a 50 basis point rate cut. Now then, on Friday, the market fears were confirmed as jobs data came in much lower than expected, 114,000 compared to the 175,000 expectations, coupled with unemployment rate rising to a new high in almost 3 years, up 4.3% versus the 4.1% rate last month. Guess what happened to the rate cut expectations? Look at the reversal here. The market panicking for the Fed as the market starting to price in a bigger chance of a 50 basis point rate cut, 63.5%. Look at how it was one day before, 22%. A week before, that was just 11%. So right now, the market's in panic mode. This brought the 10-year yields back into a sharp decline into the 3.8% zone. So even the Bank of England has already cut rates for the first time in 4 years, and the threat of a recession has come back to haunt the markets coming into the ghost month, with investors starting to ask recession-related questions, and they have started to review their economic slowdown playbooks. Remember that prior to last week, promising GDP growth of 2.8% had investors' hopes up for a Goldilocks scenario, and it was looking like the Fed may have successfully navigated the US economy into a soft landing. GDP was up, inflation was tamed. But wait, labor market was not as strong as initially thought. Now, manufacturing numbers going down significantly last month may force the Fed to cut rates more aggressively this September. And this goes to what I've been saying, right? Central banks don't cut rates just because they are being nice, right? They cut rates because there's something wrong with the economy. We were expecting a 25 basis point rate cut, which was fine because it was scheduled. But this sudden acceleration of a possibility of a 50 basis point rate cut confirms that something may already be wrong with the US economy, and the Fed is now forced to be more aggressive in cutting rates. So look at what happened to the S&P 500 after the jobs report. It was an aggressive sell down, and we are discussing this because whether we like it or not, this kind of news directly translate into what happens in the Philippine markets. Now let's first look at some charts here. This is the MSCI Philippines ETF Index, or the EFE. It is actually kind of a cheat sheet. You can look at this ETF early in the morning and you can get an idea what will happen to the PSEI later in the day. Now see how the EFE tracks the PSEI movements in advance, right? Now this is how the EFE ended last Friday evening. Now Friday evening, again, the US markets had another sell-off. What do you think will happen this week? when the markets open, right? So you now get a sense that the PSEI will open lower this Monday. As to whether it goes lower or rebounds, we don't know. Now let's look into the PSEI charts and go to the weeklies first. So far, this shows the second weekly decline for the market. So far, this still looks like a healthy correction, basically a mean reversion back to the 20 EMA. If we open lower, we could open right smack into this support zone here where the 20 EMA is. Not only the 20, even the 50 and the 100 week EMA is there. Now, if we go back to the daily charts, we have some very strong support levels here holding the markets up. 38 fib along this level, the 50, 100, and even the 200 EMA lines converging at this level. On the 2-hour charts, we can see here that we had a breakup structure in the past weeks, right? So we've had this structure here going up and this was a break. So we formed a structure here. Usually a structure is composed of 2 cycles. We have the first cycle here, up, down, up, down. 2 cycles here forms a trend already. We were going up. Now, down, up, down, up. So we've now formed a trend that is going down. Now, will the 38 fib and the moving average support here hold the markets coming into this week? Now, remember that the ghost month will start on August 4 and we will open this week into the ghost month. It will end on September 2 and the mid ghost festival will be on August 18, which luckily is going to be on a Sunday. The shooting star doji here, not much meaning because we again might open lower on Monday. So this downward bias here may continue for the short term. Let's look into some stock highlights from last week. Quick look at the heat map shows the index heavyweights suffering some losses. But look at ASEN and Globe coming in very strong last week. Real estate sector pulling back last week. Ali, a very strong sell-off, breaching this support level. Let's see if we can still manage to form a higher low at around 28, at which point we can probably buy in, watch reaction at 28, and look for the bounce. SMPH slowly grinding back into the 38 fib support level here. Nice rejection here to close the week at 29.20. Looks like a further consolidation could happen for SMPH. Now, one of our 2 winners, ASEN, breaking out of the 5 peso resistance level, a pullback at 505 or even 514 or 513 could be a chance to buy if you want to jump into the bandwagon. Globe jumping to 2,218 after news of Mitsubishi UFJ Financial investing $800 million in Mint, doubling the valuation to $5 billion. Watch out for the gap fill here and a potential pullback. The price target of Globe is currently at around 2,320, but the increased valuation of Mint may affect this and may put it up at around 2,600. You can buy in on the pullback maybe at around 2170. Now, this week will be a heavy week for the markets as we digest earnings, plus 3 important data points for the Philippines: inflation rate on Tuesday, unemployment rate on Wednesday, and the GDP growth rate on Thursday. Unlike the US, Philippine forecasts are not as alarming, but the latest projections for inflation from the BSP last week pegs it at around 4 to 4.8%, a wide gap, and is actually above the 4% target range. Higher electricity and agricultural commodities would be the expected cause of this uptick. But while this should be a temporary uptick based on BSP forecast, BSP still projects inflation to continue its decline after the July data. I'm not sure about the timing of the July data, if this includes the effects of Typhoon Karina. Most probably not. So we could actually see the effects of the typhoon in the August numbers. So that's something to watch out for when we see the August numbers in September. Now, back to the PSEI charts. Again, we might open here at around the fib support and the moving average support lines. The market needs to stay above this level. If not, the next level of support would be at around 6,400 or 6,350. Now, on to the S&P 500 charts. US markets continue digesting weaker labor data, suffering back-to-back losses slicing through this support zone here directly into the 5,300 level. Zooming out to the weekly charts, it fell straight and found some support along the 20-week moving average. And if we look at previous bull markets, right, this is actually a pretty normal pullback, and we can see that the market has consistently respected this line. Even in bear markets, the 20-week EMA acts as a very strong resistance. So we are currently back into the 20-week EMA support where it was tapped last April, right? So hopefully the 5,300 support zone can hold for now as the markets continue to digest labor data coming into this week, especially as there's really not much economic numbers for the US this week. If we go back to the daily charts, we need to hold the 5,320 level here, because a breakdown of this level will push the markets back into the 5,200 or 5,186 support zone. With last Friday's drawdown, we've added another large drawdown into this column here. We actually started the year with 0 large drawdowns, which is kind of an anomaly. We are actually quickly piling up the numbers, currently at number 10 here, but with Friday's action, we are now up to 11 with another 2% drawdown last Friday. Now, but so far, we have to remember that volatility is actually a feature in the stock market, and this chart just shows how often the S&P 500 has seen different correction levels each year. So far this year, we've had 2 5% corrections, nothing out of the ordinary, and it would be perfectly normal to see further downside, even a 10% correction down the line. Now, when could that be? Maybe in September or October, because this really has traditionally been the weaker months for the US markets. Now, while August is also typically a more volatile, low-performing month for the year, in election years, right, it has never been lower, and it has actually performed better than July. So we'll see. Speaking of panic in the markets, there's actually such a thing as a panic index, and according to this indicator here, we've reached a level where we previously marked a market bottom, right? Friday's price action may have already pushed the panic index into the 8s though, and hopefully this stat can still hold true this time around, but we'll see, right? So coming into the ghost month, you know, markets may go down, but as investors, we have to remember this, right? So when we like something, what do we hope for? So if you eat hamburgers every day, what do you hope for? You hope for hamburger prices to go down, right? If you're going to buy a car, you hope for car prices to go down. So what's the answer if you like to buy stocks, right? You hope for prices to go down. And this is exactly what's happening to the markets right now. Prices are now going down. Should we panic, or should this be something that we like to happen, right? So we'd like to see prices go down. This is actually a chance to celebrate and look for some bargains, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week.